Big software companies in 2023 are doing great. If you look at Microsoft and Google, man, they're doing great. So are small software companies. And today I'm going to be looking at Adeia. They develop software and code and intellectual property that runs on devices that show video. So if you're streaming, that device may be running Adeia's software. If you're using a cable box, it may be running Adeia software. And Adeia has a really lucrative model that I'm going to get into. I'm going to evaluate the company and look at their financial information, value the company, tell you what I think the stock is worth. And I am a stockholder of Adeia, and I'm going to share with you whether I'm going to be buying more shares, just holding my position, or selling my shares based on my evaluation. I have a process that I follow. I'll share that with you, and hopefully you find it all interesting. Do me a favor and like my video and subscribe to my channel. Give me some comments. Would love to hear from you. Get your comments on this company and comments on the video overall. Now let's take a look at Adeia. Adeia has been involved in video for a long time, since the 90s. Every generation of video, these guys have been developing some code in order to make that particular paradigm of video work, which is really cool. And up until now, some of the biggest names in streaming and video, including YouTube, license intellectual property from this company. The company is profitable, but one area of concern is that the revenues dropped. And the main reason is that they got rid of a part of the business that they didn't want any longer. They continue to be nice and profitable, but that big loss last year, led to a big drop in revenue, and they actually had a money-losing year last year. I valued Adeia, and I think that the stock price is currently discounted by 41%. And I believe that the stock price really has a value of $14.93, but the stock market will sell you shares at $10.57. I value the company based on free cash flows. They've provided guidance on the cash flow they have, and I'm going to grow those cash flows modestly, just 2%, discount them by 9%, all cash flows, including the first 4 years, and then terminal value, which is all cash flows after year 4. I get a value of those cash flows of $2.2 billion. I add the cash on the balance sheet and take away the debt to get to an equity value in the company, which is 1.7. The company is a small cap, just a little over $1 billion in market capitalization. So it offers a really nice discount of 53%. Now, if we look at earnings per share, it offers a 17% discount using their forward 12 months of earnings per share. So it offers up a nice, attractive 41% on the company. They have their balance sheets in pretty good shape. If you look at their EBITDA compared to debt, it's 2.5, and that's below my 3, which I really like. Looking at where the stock price has traded over the last year to date, the company has seen its stock really go down and really rise a couple of times. It really rose end of the springtime and into the summer. It just had a really nice rise, but then it dropped when it had that bad earnings where the revenue dropped. It's had a nice rise recently. I think investors really like that they have a lucrative business that is profitable. They basically get paid royalties when other companies use their intellectual property in their devices. So they don't have to manufacture anything. And it's a very good, profitable business. Year to date, they're up almost 6%, and they pay about a 2% dividend. So that's a nice combination of both a rise in the stock price and a 2% dividend. All right, so I need to make a decision whether I should buy more shares, should I just hold my shares, or should I sell my shares? And I make that decision following a process. And I encourage you to develop a process where you can evaluate a company consistently. That way you learn over time and you give all your companies kind of like the same treatment in order to find the best companies to own. The first question I ask myself is, do I want to be part owner in the company? Do I like the industry? And the answer for Adeia is yes. I like software companies. I like IP based companies, and I like the industry. Now, this company, do I think they're operating and performing well? No. When you drop revenue by more than 18%, it just automatically is an F minus. I know the management team may not be at fault. It may be the right thing strategically, and over the next few quarters, we'll see if they can really begin to grow the company. Now, debt is less than 3 times EBITDA, so excellent there. They have a nice discount offered, but since I'm not bought in on the management. The best I can do right now is just hold and really monitor the company. If I hear any more bad news, I'm selling. I need a couple quarters of good news and see that their strategy is working before I can buy more shares of Adeia. Hey, thank you for watching the video on Adeia. I hope you found it interesting. Do me a favor and like the video, subscribe to the channel, and please comment on this video. I'd love to hear your thoughts on the company, what you think of Adeia, and provide any feedback that you have on this video as well. Thanks again for watching. Good luck investing in 2023.